We're into the last few months of the year and our property markets haven't crashed, like many of those overseas doomsayers and others in the blogosphere predicted. Yet they're still out there, the property pessimists looking for a reason why our property markets will tumble. Only a week or so ago, another overseas expert predicted our properties were going to crash about 60%. Well, the property pessimists were wrong in 2008, in 2009, 2010, last year and this year. I guess some of them are going to push their predictions out and say, well, it's going to crash in 2013. I doubt whether they're going to be right next year either, as there are now a number of signs that the property markets have already bottomed. RP Data's Home Value Index, covering the 5 big capital cities, showed Australian houses reached a trough in May this year, and since then values have risen around Australia about 2.5%. In some more good news, only recently Australian Bureau of Statistics house finance approvals showed that housing finance increased about 2.6% last month, up close to 6% for the year. That means more people are getting set to buy properties. Around the same time, the International Monetary Fund reported Australia's economy, our economy, is the 12th largest economy in the world, steadily working its way up the list. Now, it's important to put this in perspective. Our economy has become the envy of all the developed nations, and it's bigger than the economy of many countries, much, much bigger than us, bigger populations. And in even further good news, the Swiss banking giant Credit Suisse reported Australians have the highest median net worth in the world. By the way, our average net worth is 4 times that of the average person in the United States. So what does this mean for property? Well, while in the short term property prices are influenced by a host of macroeconomic and microeconomic factors, in the long term there's only 2 factors that increase the property values. One is population growth. That pushes up demand, and the other is the wealth of the nation. So you need more people wanting property and people who can afford property. The latest Bureau of Statistics figures showed our population is growing fast again, about 1.49%, 1.5% per annum. That's the biggest growth for a couple of years now, since 2009. Last year, just over 197,000 people came from overseas. That's 18% higher than was recorded a year ago. Add to this the fact that our economy is performing well, and I don't think anyone would argue that as a nation, Australia is going to become wealthier in the next 15 years. This means things are looking good for our property markets in the medium to long term. Well, it seems that our property markets have actually turned the corner, because the latest RP data figures for September showed growth in Sydney, Melbourne, Darwin, Adelaide, and even Brisbane's turned the corner. Canberra's been a little bit flat. Perth's actually started to turn the corner as well. And the Hobart market, well, the Tasmanian market's a little bit small, so it fell about 1.8% over the quarter. So the question as a property investor you should be asking is, where to now? I think we're looking ahead to some interesting times. Different markets, not just different states, but different classes of property are going to perform differently. I still see a significant oversupply of inner city apartments in Melbourne and in Brisbane. And that's going to keep the lid on rents and prices in those particular markets, the inner city apartment markets. There's also a substantial oversupply of properties in Melbourne's outer western and northern suburbs. I can't see the top end of the market, luxury homes, picking up much until the business world, until the share market picks up. But there are definitely some suburbs in every state that are outperforming the averages. And these markets are being driven by owner-occupiers, people are getting into the market buying them homes, and also strategic investors getting set for the next stage of the property cycle. Now, don't get me wrong, we're not going to have a property boom anytime soon. We've entered the stabilisation phase of the cycle. That's where more buyers are entering the market, soaking up the properties for sale. And currently, the number of buyers and sellers around Australia are in equilibrium. So prices are going to remain flat or move up slowly. However, this is a time of great opportunity. It's not always recognised, though, by investors and home buyers. You see, it's generally still a buyer's market. Buyers can call the shots. They can set themselves up with good properties that will increase in value as property eventually moves on. In conclusion, as the cycle moves on, and it always does, the combination of population growth, and increasing wealth is going to underpin the capital growth of capital city values, as it has done for decades. Now, if you're interested in securing your financial future through property, now may be a good time to consider having a chat with the team at Metropole. Metropole Property Strategists and its team members have won multiple awards over the years, and it'd be a great time for you to review your portfolio or find out what's going on in the market. So come along and have a one-on-one chat or join us at a free property briefing. Just click on the link below, and we'd love to catch up with you at our offices in Melbourne, Sydney, Brisbane, and our associates in Perth. Remember, we have no properties for sale, which means that we can give independent, unbiased